Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 27th, 2025, and we're diving into Jiayin Group's latest earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Jiayin Group, a leading fintech platform in China, has just released its unaudited financial results for the fourth quarter and full fiscal year 2024. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. Jiayin Group reported a full-year revenue of RMB 5,801.0 million, a 6.1% increase from the previous year. However, the fourth quarter net revenue decreased by 12.2% to RMB 1,404.5 million. John, what are your thoughts on this?
Indeed, while the full-year revenue growth is a positive sign, the decline in Q4 net revenue is concerning. This decrease is primarily due to a drop in revenue from guarantee liabilities and other revenue streams. However, it's worth noting that the income from operations in Q4 increased significantly to RMB 392.6 million, indicating improved operational efficiency.
And what about profitability?
For the full year, Jiayin's net income was 1,056.5 million, down from 1,297.6 million in 2023. The fourth quarter net income also saw a decline of 25.1% year-over-year. Despite these declines, the company has managed to maintain a strong operational performance, which is a positive takeaway.
Operational efficiencies and future outlook. John, let's talk about Jiayin's operational performance. The loan facilitation volume for Q4 was RMB 27.7 billion, a 37.8% increase from last year. How does this impact their future outlook?
The increase in loan facilitation volume is a strong indicator of Jiayin's growing market presence. For the full year, the volume reached RMB 100.8 billion, up 14.4% from 2023. This growth is driven by their strategic partnerships with institutional funding partners. Looking ahead, Jiayin forecasts a loan facilitation volume of RMB 137 to 142 billion for 2025, which shows confidence in their growth trajectory.
And what about their repeat borrowing rate?
The repeat borrowing rate for Q4 was 69.9%, slightly down from 72.9% in the previous year. This indicates a stable customer base, although there's room for improvement. Jiayin's focus on leveraging AI technology and expanding globally should help enhance customer retention and acquisition.
Strategic initiatives and leadership insights. Jiayin's CEO, Mr. Yan Dingui, mentions several strategic initiatives in the report. Can you elaborate on these?
Absolutely. Jiayin is heavily investing in AI technology to optimize their services and customer segments. This innovation-driven strategy is crucial for maintaining their competitive edge. Additionally, they are planning to accelerate global expansion and diversify funding sources, which should open new growth avenues.
There was also an update on their dividend policy. What can you tell us about that?
Yes, the board has approved an increase in the annual dividend amount to around 30% of the net income after tax, starting from 2025. This move is aimed at providing higher returns to investors and reflects the company's commitment to shareholder value.
Key takeaways. In summary, Jiayin Group has shown resilience in a challenging market environment with a solid full-year revenue increase and strategic initiatives for future growth. Despite some declines in net income, their operational efficiencies and strategic focus on AI and global expansion are promising. John, any final thoughts?
Jiayin's performance highlights their adaptability and commitment to long-term growth. The increased dividend policy and strong loan facilitation forecast for 2025 are positive indicators for investors. It's a company to watch closely as they continue to innovate and expand.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Jiayin Group's performance in the comments below. Until next time.